Okay, I think we're live.
Yeah, and I have shared my screen, so you should be seeing the browser.
Yep.
Okay. Yeah. Hi. So the agenda for today's meeting is based on seeking inputs for the stakeholder consultation related to fintech issues. So. Cashless Consumer is being invited to provide inputs to this working group of a steering committee. So, to give some context, the Ministry of Finance and Corporate Affairs. Uh, our Finance Minister Arun Jaitley constituted a steering committee for uh, all fintech related issues. So this committee has all the secretaries of various departments, including like IT, financial services, MSME, and customs, and UIDI CEO, RBI's deputy governor. And the terms of reference of this committee is like they've broadly mentioned 5 points. So of which one is to see like where we are on the fintech sector globally, and how India is progressing when compared to the rest of the world, and like uh, how do we just better understand the current state of the industry, and to also analyze critically the regulatory regime spread over different entities that has impacted growth of fintech in India. So a quick note here. So we are cashless consumers, and at 50p we've been covering a lot of payments related topics, but fintech slightly covers the entire spread of the uh, technology that is powering all layers of the finance. So that includes banking, and that would include MSME lending, banking, lending, payments, investments, and be it like the capital markets or the mutual funds or insurance. In all these sectors there has so when we say like fintech, it's not just payments. So it'll be payments plus the neo credit, digital lending, plus say insurtech. So uh, so that's the overall terms of reference of this committee. So they'll not just be looking at payments, but broadly uh, all of fintech. But I think the payments being the busiest kid in the entire space, so payments would attract a significant attention. The third point is, of course, uh, how do we leverage fintech onto, say, MSME financing or affordable housing? Other, it even like goes on to say like how do we do land record management, which is directly not essentially uh, a place where traditional fintech has been there, but uh, because uh, fintech is encompassing technologies which could be potentially used in solving these problems. So these are also added along, and one of the key focus for us is essentially around increasing access and adoption of digital payments. And to study developments in all these areas. So this will be like so this is around like how do we how do we know better about the entire range of fintech that can be possibly deployed, which will trigger growth on all these sectors. And the next point is about like how do we develop regulatory interventions. So how do regulators better equip themselves? So what can be a business friendly light touch regulation model, which also takes care of regulatory concerns as well as is friendly to business? So one such model that's been talked around is the regulatory sandbox model, and how that will impact like the innovative ability, so that like the innovators can focus more on their innovations rather than on regulations. And so the last point encompassing all of these is like how to promote like ease of doing in business. So these are like some of the points, and then the next 2 points is around like how do we use data for digital lending. So it talks about data with GSTN and data with credit information companies. Uh, it actually mentions in open domain, but I'm not really sure what portion of that is in open domain and how that impact. So from a consumer standpoint, this also means that what are the data rights. So some of that conversation is also part of this committee, this steering committee's terms of reference. They are inclined to look at these particularly with a view of developing applications for financing MSMEs, and they also talk. They're also interested in working out a unique enterprise ID number similar to the UIDAI's Aadhaar for the enterprises. And how do we how do we go about international cooperation opportunities in fintech? So recently, you may have heard that UPI did a cross-border remittance. UPI was added as a uh, payment option for cross-border remittances. So some of these opportunities, like how fintech can be used to collaborate on cross-border opportunities as well. So these are the terms of reference of the steering committee that is being formed by Ministry of Finance. Now, that steering committee has decided to call upon for a stakeholder consultation. Uh, and we were invited to that along with a set of representatives from the industry. Uh, uh, the questions that were posed to us were listed here. So NIPFP is organizing this stakeholder consultation for Ministry of Finance, Department of Economic Affairs, this steering committee. So the questions posed by them include the 8 questions that are in the document. So we'll go through one of these and we'll see. I've made some notes. I was hoping we can expand on them and discuss on them during this hangout, and we'll probably through the week until when the window is open, we could feel free to reach out and we can add your views as well. Abhishek, do you have any comments now? We'll go to the questions.
I think we can start going for the questions.
Okay.
So let me just introduce the questions. So according to the list of questions put out, there are about 8 questions which NIPFP has put out asking for responses.
Right.
So the first one I think is on what are the current roadblocks to provide lending and other financial services through a fintech solution to the people who don't have access to formalized bank lending. So this question, I'm assuming, is talking about all those companies which are doing alternative lending, right? Like if they're using any alternative data sources for lending, then the companies would fall under this.
Right. So lending is one part. So it also talks about, say, other financial services, right? So that would say even include a payments, say in the case of other enabled payments, because it particularly talks about to the people who don't have access to formalized bank lending. Or even the other financial services could potentially include other financial services like not just lending, but say insurance and investments as well. But particularly, it talks about how do you what are the roadblocks for a fintech solution to deliver to that category of market which currently is not served by the formal banking sector. So I just came about one response thinking consumer in mind. So that is like some of the technologies that are available and some of the regulations need for use of such technologies such as the Aadhaar KYC uh, is while it reduces the costs for the providers providing these lending and financial services, it adds certain risks as well. So that would include, say, new methods of fraud or the data risks or the privacy and cybersecurity risks. And these are actually vastly unknown for that consumer, especially the one which is not in the urban India and which is not being served by the formal banking sector. So we are talking about potentially a rural person with lower literacy, understanding these and then having access to this. So what actually happens is because of this information arbitrage, we've also seen some frauds happen. So that frauds either could be like a systemic weakness, or it could be an agent enabled fraud. So we've seen even the delivery of the cash in the last mile through APS, the banking correspondents, they do have there are issues on their sustainability, and some of them do indulge into fraudulent practices. So what essentially this means to the consumer is not having enough trust and confidence in the formal lending solutions, and they go back to, say, the informal lending or informal modes of payment. So that includes cash. So so in order to kind of break this, one thing that is needed is beyond the awareness on existence and use of certain products, which has been happening, let's say the promotion of Beam and things like that. So but what is also needed is a broader digital literacy. So there is something called as National Digital Literacy Mission. So they do undertake some of these digital literacy programs, but more trust is needed specifically on initiatives such as the RBI say, which tries to caution users against some of these frauds. So what this basically means is they'll be aware of what are the risks, and they can then weigh them off and probably have better confidence in using these products and services. So there is need for an increased messaging, both, say, by the government and the industry and the regulator on, say, the risks and safety measures, which will improve the general awareness. And confidence will also come when firm action is taken against fraudulent practices, be it at agent level or at a much higher corporate level. So this is one thing that I could think of. So you mentioned something about use of informal use of new data sources for informal lending, right? So are there like roadblocks in that? Because one potential roadblock is essentially we don't have a data protection regulation yet. So that's like a gray area for anyone who is operating right now. So because right now it's not regulated, but the future course of regulation is unknown. So it's like a potential unknown for businesses to enter the business with. So is there anything you want to add on that?
Uh, yes, I think I've heard a couple of cases in the past where I think especially among services like ones which lend to students, where students are not being properly informed about the terms and service of these services. So they just end up signing up for them, and the whole structure itself is like a Ponzi scheme. So the point about the data protection is a good one, because that is something that we'll need before or we'll need some sort of solid work on the data protection thing before we start regulating using alternate source of data.
Right. And yeah, so one other thing that can serve as roadblock that I see is around the other regulations and the use of and the distinction on the use of Aadhaar by the neo fintechs. So some of them, so the banks do have a higher level of access, and some of these fintechs just got their access revoked off the KYC system. So what this does is essentially it provides an unlevel playing field, and it also relying on the other eKYC infrastructure has been a significant risk for them, because like suddenly they were cut off and they are unable to carry on their business. So this there has to be like a structured regulation which either allows or does not allow access to certain systems, be it Aadhaar, tomorrow it could be, say, a public credit registry. So there has to be a clear principle-based policy on like who gets access and what level of access, and so that will determine the ability of a fintech firm to kind of gauge their costs and better invest on their solutions and product design. And so the second question talks about like, have you considered launching fintech products or services but not done so due to compliance issues? In what sectors, banking, investments, insurance, do you face significant compliance issues? So, one thing I was just mentioning was the eKYC access is a compliance issue, and the other set of regulations and compliance keep changing rapidly, so that adds a cost and brings along with an uncertainty. The other thing that I found was like all the NISM certifications that are required to kind of enter the investment advisory services to operate into the investments. So one needs to have an NISM certification, and all the NISM certification exams require Aadhaar. So I don't know why that has been force fitted there, but that I knew at least one founder who had to go and enroll for Aadhaar before writing these certifications, which is a precursor to starting up. So, on a scale of ease of doing business, this is like a deterrent. So, you have any thoughts on this, Abhijit?
Hello.
Okay. So the next question is on what steps have been taken by regulators to ensure a fintech company is not currently regulated by a particular regulator and is able to seek clarifications on its services. What is the nature of responsiveness and engagement offered by regulators you have interacted with, and how this can be improved? So, firstly, from a payments consumers perspective, we are yet to have the payments regulator, so there isn't a regulatory body that is available yet, but in terms of uh, the we are not a fintech company, so we don't have the experience of reaching out to regulator for clarifications and the responsiveness. But in general, this is a cause for concern where like we don't know who is the regulator is or what, and the regulator is also not mandated to be responsive. So, and especially to the consumer. So, while this question asks about a fintech regulatory responsiveness towards a fintech company, so we need like a clearer set of guidelines on regulatory responsiveness, particularly on payment space, where there's no regulator today. And one thing I felt that this question was posed more towards uh, the crypto currency payment systems, cryptocurrency startups, which are like the fintechs which are operating, and there's no clear regulator on these currencies. So uh, the sad part is we've had the cryptocurrency banned, and any interactions with the banking system has been cut off. I don't know what kind of responsiveness they are receiving from the regulators. Abhishek, maybe we should be reaching out to some of these crypto startups and see uh, if they have any comments on this.
Okay. Yeah. Does an organization like FinCert in
Sorry.
does an organization like say a cert in for FinTech? I think it was discussed a while back. So
Right.
does that tie into this? Because right now there is no way to report a breach of a FinTech.
Right. So I don't think the FinCertain has actually started functioning yet, because there has been the announcement of FinCertain, but there has not been any functioning of it. But essentially, the regulators that are mentioned here are like the regulators of each of these uh, divisions of finance. So you'll have the banking regulator, that's the RBI itself, and the investments regulator would be the SEBI, and the insurance regulator would be IRDA,
Mhm.
and mutual funds again fall under SEBI. So are these regulators responsive enough to fintech companies operating in this space? Is largely the question. I'm not sure. Like FinCertain would also technically someday become, say, a cybersecurity regulator sort of thing, cutting across all these domains. Uh, but in a sense, like the question is around like, are these existing regulators uh, responding to your fintech companies' clarifications, or in case if a particular sector, let's say payments, is not covered by any regulator specifically, so RBI still is the de facto regulator of uh, such products and systems. So same is the case of crypto, and until crypto was banned, right? So RBI was the um, crypto regulator, even though RBI did not have a view on it till some time back. So the question is more around how does RBI itself respond to such companies where there is no clear regulator. So if we go back to the terms of reference, say for example, it actually says it actually includes land records management under fintech for whatever reason that is. So uh, so for example, and we don't have a regulator for uh, land record management fintech company which is onto, say, developing technology for land records management. So uh, I don't know, like uh, what we can comment on regulatory responsiveness. So one thing, there is a uh, there's a paper which I read, which talks about like what are the useful metrics for a regulator to respond, like how often they should be conducting consultations, and what should be the duration of these process followed in these consultations, how are comments, stakeholder comments getting incorporated, and in case where like the regulator has to kind of make some decisions based on views collected, how does a regulator kind of justify why it has taken a particular stand on a recent approach than like based on, say, uh, uh, based on what the regulator wishes. So this is essentially to kind of improve the regulatory, strengthen the regulatory governance, so that the industry has a strong regulator which is like accountable. So part of that is essentially the regulator should also be responsive enough to the stakeholders, particularly in case of clarifications and things like that, which affect a business's ability to kind of launch new products or enter new markets. So moving on, the next question is about do laws and regulations related to consumer protection and enhancement of safety and soundness of financial system need to be reviewed in the light of changing relationship between traditional players and its consumers? So I had two comments here. One is we need more tighter reporting norms, because we do see regulators themselves not having much data uh, on what the service providers operate, and increasingly more transparency of those reporting requirements, so which will essentially make the regulator not just the regulator see that data, but a broader audience seeing that data, which kind of puts in more eyes to the data. So that is one. So that this will help both, say, improving detection of any compliance irregularities, because right now we are not really sure what kind of uh, reactions regulator does upon these mandatory, say, compliance reports, or are they just sleeping in some storage space? So we need the better access to, we need more tighter reporting norms and more transparency of such data, so that more people can look through it. One of the other point that I had to make was essentially on the changing relationship, not just traditional players, and traditional players would include state as well. So one of the big friction that is there through the entire ecosystem, both say for the businesses and for the consumer, is around the compliance requirements, and cutting across all of finance. We have the PMLA, Money Laundering Act, right? So one thing that has been argued for is we need to have proportional requirement for KYC compliance. Not everybody needs to be at the same level of KYC compliance, and KYC. There has been even arguments around when can we not have KYC and still be not causing any risk to the financial system soundness and safety. This basically will also reduce friction, both in terms of delivering services, as well as reduce costs for the businesses and for the citizen as well. In increasingly uh, data tight world, so this would mean that citizens get to have not lose all of the data, or have some right to privacy as well. So given that the right to privacy judgment has come up, there is also a structured need to kind of revisit the PMLA reporting requirements, what kind of data gets captured, and is that really useful in detecting, and if it's not, can we get away with some of those? So this will actually help both businesses and consumers as well. uh, Next is what infrastructural constraints are there that inhibit growth of fintech in India, particularly with a view towards financial inclusion and access? Example, better broadband service penetration. So, uh, while some of these infrastructure issues are to be fixed, like better broadband service penetration is being looked at through, say, the public Wi-Fi initiative of TRI, and we are getting better in say the mobile data penetration with 4G. But some of the other infrastructure that really needs to improve is one is a scalable consumer grievance redressal infrastructure. So now when we see across all these uh, industries, uh, while the cost of doing the business and say cost of transaction for the consumer has come down largely to reaping the benefits of uh, the technology that's been deployed. One thing that has not happened is the cost of solving a grievance redressal is going significantly high, and so this is the cost that business incurs in resolving agreements, and the cost to the consumer in following through the grievance process, or in some terms following up the regulator, is also pretty high, that it kind of provides no incentive for the consumer to report and follow up, no incentive for the business to kind of fix the problem, because there is no regulatory penalties for such uh, not handling grievances in a proper way. And So the way one way to solve this is like, how do we scale this up for like across the board? How do we have a better, cheaper consumer grievance redressal infrastructure? Because what this essentially does to the consumers is they lose trust in these formal systems, and they fall back to their traditional modes of, say, be it lending or payments. So one way to kind of solve this will certainly inhibit the growth of fintech in one sense. And the other thing is the regulatory infrastructure and the regulatory capacity needs to improve, and it needs to have more a transparent, responsive regulator. Uh, so, and the uh, capacity of the people participating in the regulatory consultations should also be in line with the understanding of, say, the industry and the government. So there is a greater need to have a better understanding of these issues among a broader set of people, so that these could the regulatory process can deliver better results. And one of the other thing is scaling up the competition commission and antitrust policies that we have today in an increasingly networked economy, and where we see like players cutting across various domains and various uh, platforms converging into one using technology. There is a need to look at competition and antitrust issues uh, in newer ways. So this could also, if not taken care, could lead to kind of stagnation. Uh, Abhishek, you have any points to add on this, on the infrastructure?
No, I don't think so at this point.
Okay. So the next question is, what data needs to be collected, made digital, accessible, and more for more and better provision of fintech in India? So the context to this is, so there is a public credit registry that has been set up, and a high-level task force just submitted its report. So this looks at creating a central repository of all credit data, and I need to go through that to see like what the RBI is planning to do on the public credit registry, and what kind of data will be shared, will be collected, will be made accessible using that, because that would largely change the kind of data that the digital lenders especially have access to, and what that means to everyone in the ecosystem, including the consumer, and how does that impact. So that is, while that is one, uh, I have added one point specific to a consumer's concern is around there needs to be more regulatory open data. So while uh, the regulator is collecting some data, more of that data should be opened up, and we should also have ways to kind of measure and rate the fintech service providers on various quality parameters, and probably come up with some kind of a grading system or by service levels, because we currently have say a very large market with many number of players, like be it in payments, where like we'll have some 100 payment apps literally, or let's say a mutual fund, we probably have something like 40 or 50 mutual fund houses. So how does a consumer kind of see through this competition and kind of get through something like what's the best service provider for him or her? So people, while say the established industries, let's say the mutual funds, and all those have some amount of data on functioning of all these providers, and uh, there are places where you can get comparison on them, but there is still a need for like a lot of data on say the other providers, and let's say including payments. Insurance too has, we've seen the insure tech providers like insurance comparison sites. That's also there for lending, but one thing that all these comparison sites focus on is only on uh, the marketing of these companies. So essentially, it's a pitch of best quote by all these companies, as against say looking holistically at comparing service providers on various quality parameters that could say include not just the cost, but let's say also the service levels measured across various levels, right? So that would kind of give the benefits of competition to the consumer. Uh, Now, some of this data is already existing with the regulator. It's just that it's not available in a nice, fancy dashboard. So that has to be made either the raw data has to be made available, made digital and made available, or like uh, be made available more friendlier formats that people can build services on top of that, like what has been done say now with the insurtech or the loan comparison sites, which does only at the rates. But what if you could also do that on various other quality of service parameters? So something similar to what Try has done with the network coverage between the telcos. That kind of gives consumer more information on like what is best for him or her, and it will propagate like further growth. And the next question is again for business. It's around like are you operating on multiple jurisdictions, and what are the implications of differing data protection standards, data storage and sharing requirements on your business? How should Indian regulation be designed to ensure India is competitive in fintech fintech sector? So one thing that we commonly see across, I mean, at least in payments, is a very high level of centralization of data. And some of these platforms that fintech currently operate, let's say UPI or the BBPS, they are like highly centralized data platforms. So the data is not just with the fintech service provider, but is also with network operators. This leads to kind of no competitive advantage for the fintech provider to kind of have access to data or insights. So because that data is shared with the payment system operator as well. So that in some sense put together with the PMLA regulations can be treated as what I call as a data taxation. And if we compare, we are probably the highest we'll be probably having the highest data taxation levels. And data taxation levels would prohibit growth for both the industry and the from an industry standpoint for businesses to offer differentiated products based on the consumers they have acquired and their data, as well as for consumers in protecting their privacy, and hence moving away from these products which collect data which is highly centralized. So this is one comment that I had. So this obviously also needs to look through GDPR and a laissez-faire style regulation like that's there in the US, which is like so how do we compare with them, and what kind of impact that has on us for growth of fintech sector. So uh, and the last question is on the skills that are needed for fintech demand, and is there a trend for particular skill sets? Do you face resource constraints? What's the role of government and this? So again, from a consumer standpoint, I did write on uh, we need to have as increasingly even to participate, say, in a regulatory process or a government representation in the fintech sector, you need to have a broad-based understanding of finance, technology, economics, public policy, because it's a cross-functional skill set that is needed to look through these problems, these industries, what their problems are, and what their solutions could be. So one thing that needs to be done is provide like more support for academic programs on cross-functional studies, research, and what will also help is government putting up detailed vision documents and review the progress of that with the regulator, industry, and all the stakeholders. So something, an example of this could be like the uh, Vatal Committee report, which kind of provided the context or a medium term to long term vision of the committee. But what's also needed is what's the view of government, and what's the view of stakeholders. So now publishing that document is the first step, and then having a holistic uh, discussion around that topic, and then subsequently say following that up with what's happening on that, say on a yearly or 2 yearly basis, which would kind of help have everyone along the same level of knowledge which is required to kind of engage in these conversations. So that is what I have till now. Abhishek, you want to add something?
No, I think these are a comprehensive set of questions, but they all seem very targeted towards the larger companies. So, is there anything that you think that the smaller companies are facing that's not included in it?
Good question. So, but I'm not really seeing the distinction, say, on larger versus smaller companies
Mhm.
in the questions that have been asked. Or like, do you see any specific example? But I mean, I get the larger point of, say, uh, the steering committee itself is kind of looking at ease of doing business, and I'm not sure how well does this go along with, say, some of these startup incubators and their problems and their policies. But
Right.
is there anything like you want to add on that?
No, I think no, not really, because on the questions themselves are like seeking responses from companies which say are already operating in multiple jurisdictions or they have a hiring problem. right? So I think some companies, maybe the smaller 8 to 10 member fintech companies who are trying to do something, they either have to partner with an existing uh,
Large.
firm or existing financial institution to provide services.
Right.
So do you see that partnership becoming a problem? Because the smaller companies would be using or building their tech based on the platform of another bigger company, which is always risky.
Yes, but I don't think that is kind of covered explicitly here. I think one area that I could see that be uh, put together is on, let's say, around the competition and antitrust, and
Mhm.
like how can we encourage more smaller players as well, because the larger players, they do have inherent advantages. Uh, but so, how do we kind of formulate policies specifically on fintech sector to encourage the smaller players to be uh, are more friendlier towards the smaller players as well?
Right, right.
But I think we need to kind of put something around uh, material on, say, whether it's friendlier to smaller companies or larger companies first, or have some reference to that, and then kind of put
Hmm.
through that point across and say like uh, that's potentially an infrastructure constraint in some sense, because like
Sure.
smaller companies need that extra let's say infrastructural support that could be like in the form of I think the one area where the steering committee itself talks about is that regulatory sandbox approach. So potentially a smaller company will not have the wherewithal to kind of stand through the regulatory compliance uh, requirements on the day one. So you kind of have a sandbox, and on the regulatory sandbox you do get some kind of a regulatory leniences for the trade-off of, like, say, performing a small pilot or something like that. So those kind of things, or it could be a real infrastructure issues, like it could be around setting up of more incubators,
Sure.
and things like that. So those probably could be added. I'll probably add something like on incubators, and how do we make it startup friendly in the context of fintech, because again the context matters, because fintech is a networked world. So by default you will have to network with the other entities which would be large, or you will be part of a network where players of all sizes coexist at the same level. So, but how do you ensure that, say, a network does uh, level provide a level playing field to all players of all sizes? So this could be seen, like, say, in the context of how a payment system operator treats its own payment system players of varying sizes, even if all of them are in the same network. So things like that needs to be like dealt, because these problems are something that is specific to fintech sector. Maybe we need to phrase that well and put it here. Startup friendly in a network environment. So I just added that. We'll see how we can put that across that. And any other comments?
No, I think so. What we'll do is either we'll update the same blog post with these comments, or we should put out a new blog post if that's okay.
Yeah, I think we'll kind of update that with the link to the video, or the link to the video will already be available.
Yeah,
But I'll try and reach out to the two people who commented through some kind of alternate channel and see what they want to have, like, and then like ask them to leave a comment on this talk, so they then that could continue. So
sure.
maybe it's not. It's unfortunate that we couldn't have them here, but we'll see how to get their comments as well on this.
Okay. Okay, great. Do you have anything else do you want to add before we close it?
Nothing else. So this this submission has to be made on Friday to the committee. So I'll be freezing this on mid Thursday afternoon. So if you want to send in comments, please send by Wednesday night, and then I could come up with a consolidated comments by Wednesday, and I'll probably be writing a follow-up blog post on the actual consultation process, along with the written response that we submit and the deliberations that happen during the meeting. So that's probably sometime next week. We'll have the update on that. So I'll probably we can publish the written responses on Friday, and we could publish a subsequent blog post on the deliberations that happened during the meeting.
Sure. Okay. Thank you so much for joining, Shrikant, and sharing your comments. I think this is really useful just to get a good overview of what the questions are posed and how do we approach this. So I think this is one of the first times they're doing such a consultation.
Like probably a physical meeting, yes. Like we did have the Vatal committee publishing its report, and they did seek comments. Even the PPI regulations did seek comments, but it was not like a formal meeting and a two-way interaction. It was like the ministry or the regulator publishing a report and asking feedback through email, which some of us did send, but we didn't kind of have a back and forth conversation or say a physical conversation. But yeah, I think this is the one of the first time that they are having actually a physical meeting as well, because they are part of a steering committee. So the steering committee would probably have to give its report sometime. So they are collecting inputs for the steering committee's work, and the steering committee would probably uh, putting up a report which could be made as a some kind of a policy framework for the sectors. And the scope of these issues that I mentioned, the steering committee is actually quite large. So we need to see, like, and this will not be the only consultation, right? So there may be different consultations with different stakeholders, or like say banks or the other stakeholders as well. So we're not aware of that. I did read that one meeting of the steering committee already happened in the month of March, and coincidentally, it was the time when the PNB fraud had happened, and there were deliberations around the Swift messaging system and the CBS linking, and discussion surrounding that, because essentially that was the PNB fraud was like just about active then, and the steering committee did meet and discuss on these. There was a brief report on that, but aside from that, there has been no references to this committee's work publicly yet. So what I'm also thinking is we'll kind of maintain a page where we track the steering committee's work through news reports, and kind of see through what essentially eventually happens with the steering committee, and it'll be good to track the developments of this as well.
Sure, that sounds good. Okay, thank you so much for joining this and sharing your comments. I think we'll close the live stream now.
Yeah, thanks, Abhishek.
Yeah. Thank you, folks, for watching, and this is really useful. So let's just take it forward with the updated blog post.